Well, hello, Nervos land. Rodrigo Santiago here, and let's go to the third video, the blockchain killers numbers 2 and 3, limited scalability and insecure transactions. So this is for entertainment purposes only. It's not financial advice. You should do your own research. You should verify the information I bring here for yourself, and you should take your own decisions based on your judgment. I don't expect to be right here. I'm just sharing the way I think about blockchains. So who am I? I'm Rodrigo Santiago. I'm an IT tech leader in Brazil and a proud CKB holder. The more I study CKB, the more I get convinced that this is a killer blockchain. And my enthusiasm is all about Nervos. But I'm not a native English speaker, so forgive me for any mistakes, written or spoken. You're going to survive, I promise. So let's see, this presentation will help you to identify key points to be analyzed in any blockchain investment. And if I'm wrong, just correct me with whether it is on a comment or having a private conversation on Telegram, whatever. Any ways you want. Just question me, question the content, just bring the truth to bear in front of everybody, because we are learning together. So in the former video, we got to understand a little bit more in depth what ecosystem sustainability is. And in this video, we're going to attack the problems of limited scalability and insecure transactions. Those are great killers for blockchains. This is a pretty deep conversation in this video that we're going to have. And for some of the parts, I still don't have all the best answers possible, but it's a nice conversation. I guess you're going to like some parts of it. Well, what we have in the current blockchain space is the more secure is the network, the lower transactions per second it will have, because we have to verify over and over if the transaction is valid. So it's the first basic principle of blockchains. If you want more secure transactions, you will usually have smaller transactions per second rate. So the second point is some platforms are trading low level of security in exchange for a high number of transactions per second. In some blockchains, the developers will argue that they have the fastest TPS on the planet. But security-wise, you're going to have less security, or you're going to have less decentralization. We're going to understand decentralization. We're going to understand what those are. So, yeah. Some people are giving up security or decentralization in exchange for a high number of transactions per second. And as blockchains get more cluttered with people, fees are getting too high. So this is a very big problem. For Ethereum, for example, people want to exchange things in Ethereum with Uniswap and everything. And yeah, fees are going higher and higher. So how do we solve that? So when we look at a blockchain world, we want everybody to go in, right? Because it's decentralized, the government can take it down, the coins, let's say the tokens, the coins, the new financial system that we are building with blockchains, they make us self-sovereign. We don't depend on banks, we don't depend on fiat money. So when we experiment that, we desire that the whole planet uses it. And let's make the current financial system obsolete and bring a new thing that brings more equal opportunities. But in order to have mass scale adoption in general, we will require the highest security level, the highest scalability, and the lowest fees possible so that anyone can actually use the blockchain for transacting, right? So let's see some examples that makes us reflect on what is going on and how to better select a coin to invest. So this is a chart from hackernoon.com that compares transactions per second among different blockchains. So there are some observations I like to do here. First one is Bitcoin is the slowest network of all, but it's the network that holds the highest amount of value. And there's a particular thing in Bitcoin that is most users won't complain that Bitcoin's transactions are expensive. They won't complain also that Bitcoin is the lowest network. Why is that? Well, the Bitcoin utility today, Bitcoin is used most for buying and holding and protecting people from government inflation. That's it. From fiat currency inflation, bad government, corruption that destroys money, as we have seen in the last decades. So in many countries, inflation is going sky high, and people just want a coin that has no inflation, and Bitcoin is the answer. Bitcoin is also very decentralized. It does not have the best decentralization possible, but this is another conversation. It has enough decentralization so that the governments can't shut it down. And even if a government can declare having Bitcoin illegal, if a government tries to ban Bitcoin, that government can't shut down the network. So even if people are not allowed to buy Bitcoin on regular exchanges like Binance or Coinbase, the network won't go down, and people will establish a parallel black market in order to buy and hold Bitcoin, because it just protects from inflation. We got 20 million, 21 million of Bitcoin as the max supply, and that's it. So it's a very good one, very decentralized, highly secure network. And that's why it holds the most amount of value today. And even if it's slow, people are just buying and holding. So I get a ton of money, I buy Bitcoin and hold it. So I keep holding it. If I want to take some out of it, I just sell a little bit. Then I do day-to-day exchanges. I just exchange it for dollars or any currency I want. And then I can buy stuff that I need. But for the most part, people aren't requiring that Bitcoin network has a high TPS, a high transactions per second rate. So the first thing to notice is the transactions per rate required will depend on the utility of the token. There are people who are trying to expand BTC transactions per second rate, but it's not that necessary right now because people aren't using Bitcoin as a day-to-day currency. They are just buying and holding. So this is the first thing to be noticed here. Second thing is, ADA coin has a speed that's claimed by developers. They are claiming that ADA is going to do 250 transactions per second, but ADA is not on mainnet yet, so it's just speculation so far. What else do we have here? We have ETH, which is the second most valuable blockchain today. It's also one of the slowest ones, but in ETH, different from Bitcoin, people are complaining a lot about ETH's limited scalability. Why is that? Well, because the target use case for ETH is very different. ETH is proposing a network in which people can transact the most different kinds of assets, and the smart contract thing. And from the start, you can imagine if you're having all those use cases like notaries or exchanging and trading assets, you should have a high TPS capacity. But ETH doesn't have that. They want people to build exchanges on top of it, like Uniswap, but the network can't handle as much transactions. So it's a problem in Ethereum, but it's not a problem in Bitcoin currently. Bitcoin developers wanted Bitcoin to be a day-to-day currency, but because of Bitcoin's qualities, it's used as a store of monetary value. So whenever you're investing, just look for those qualities, those characteristics of the coins you're buying. Can it be feasible? Can it serve the users well? Will the coin appreciate over time without people complaining? Are there any bottlenecks in the system? So another thing that's good to look here is XRP just kills it, right? 1,000 TPS per second. TPS per second is funny. 1,000 transactions per second. And the developers claim that the network can actually serve 50,000 transactions per second. Well, XRP is highly centralized. All the validators in XRP are subject to Ripple's governance. So there are severe problems with regarding conflict of interests in Ripple and XRP. But nonetheless, they've got a huge transactions per second rate. So yeah, there's a small deception here in the US. We have 50 transactions per second being carried, and the developers claim that the network can serve 4,000 transactions per second. So those are kind of the initial insights that we get from this chart. XRP users, they are it's an interesting example because people are buying and hold XRP at the same time they're doing a lot of transactions because of XRP use case. So it's a very good marriage of a high TPS needed and a buyer and holding strategy. If Ripple can solve the conflict of interest with the SEC and everything that's going on, it is a good, it might be a good option for holding. So from these first examples, we are going to look at Cointelegraph. They say that March 24, they've said that Ethereum high gas fees crisis won't be solved by the last resolution. So they are trying to tweak the code a little bit so that the gas fees are reduced, but this is just a linear problem in face of an exponential one. What's the linear problem? Linear problem is just diminishing a little bit of the transaction fees, and the exponential problem is people will continue going to Ethereum network, and they are continually demanding more and more transactions from Ethereum network. So if you have two big of a demand to serve, but you just can serve a small amount of transactions per second. The transactions themselves get scarce, and then we have the competition for who can pay the most gas to get the transactions processed first and faster. So as Ethereum transactions are scarce and they are valuable because Ethereum network does a good job on decentralizing, on security aspects. As Ethereum does a good job on that, people will continue demanding more and more transactions. So the transactions becomes themselves a scarce resource, and then we have a price fight. So yeah, it can't be solved with those current workarounds. So we see that Bitcoin average transaction price is not on the top currently, but it's kind of going up consistently. It's averaging maybe $20 per transactions, sometimes a little bit more, sometimes a little bit lower. And Ethereum transaction is in the average is $17 currently. But people complain a lot about Ethereum, but doesn't complain about Bitcoin. So different tokens, different aspects, different utilities, different intentions for the users, the use cases. And yeah, one network, the slowest one with the highest average transaction fee, people won't complain as much because they are just buying and holding. Not as much transactions are required. So when you're choosing a coin to invest, just check if the network is sustainable in that sense. And there are two out-of-the-box solutions here. As an example, we have Nano and IOTA. Nano and IOTA are two blockchains that they require no fees to do the transactions. So fee-less blockchain. Anybody can buy or sell stuff on Nano and IOTA at any time they want. So there are no free lunch, right? Computer resources are being used, electricity is required, and those are scarce resources. Who is paying behind the fee-less transactions? So there are two kinds of people who are paying for the transactions. First one is the altruistic ones, the ones who see an ideal world in which anybody could just use a network that has no fees at all. So these people, the altruistic ones, are genuinely spending their money so that other people can just do transactions. And in the case of IOTA, any person who wants to spend a little bit or do some transactions, they have to validate two other transactions first. So we have everybody helping everybody. That's the main focus of IOTA regarding fee-less transactions. So pretty intelligent thing. Two very different examples from Bitcoin and Ethereum. But there's another kind of people who are into these ones. And it's the kind of people who are waiting for the coin to appreciate. And they help the network to grow. They bring resources, they pay for energy costs because they are waiting for the coin to become more valuable and just buying and holding or speculating on IOTA and Nano. But there's this thing that it's not a match in my mind, which is if developers want it, as you see here, Nano is perfect for everyday transactions. So the developers are looking at a world in which the coin is used for everyday transactions. But most people who are buying Nano or IOTA, they are buying for speculating on the price. So a person that's inherently wanting the coin to appreciate, will this person want to use that coin on everyday transactions? I don't think so. So this is a very weird stuff in these two blockchains. How could I use those blockchains as an investor if the developer's intention is that the coins are used to do everyday transactions? In case of IOTA, is everyday transactions on the Internet of Things space, which is basically something like I will buy a stream of information from a satellite to do weather forecasting, for example. So if I'm a company and I'm wanting to buy data from a telescope or from a satellite, I should know upfront what is the cost of that transaction. So it's pretty weird to me. How could people use IOTA to buy stuff if most people are just buying and holding and speculating and trading and having the coin price being volatile over time? Those two things, I still can't understand it. If somebody could explain it to me, it would be awesome. Because whenever I'm wanting to invest in a coin, I want a coin that's by definition buy and hold, because the demand will go higher and the coin will appreciate, and that's it. So on Bitcoin.com, we see a mention on Nassim Nicholas Taleb, and he says exactly that. He said that he sold his Bitcoin because, in his point of view, Bitcoin is a failure because you can't put a price in a thing if the value of the currency you're using is just speculative and volatile. How can I price something in Bitcoin if Bitcoin keeps changing the price in comparison to stable fiat currency? Well, looking at the world today, I guess no coins are stable enough. And no fiat currency are stable enough. If you're going to Brazil, for example, or Argentina or Venezuela, you're going to see high inflation. So the coins, the fiat currencies, they just devaluate over time. So how could we price goods and services in a fiat currency that's derailing completely with high inflation rates? So dollar, euro, libra, those are kind of the most stable ones. But it's also a problem. How could we price a house 10 years from now if dollar keeps depreciating? So it's a very complex problem. And we have Tesla trying to price a car in BTCs, like 1 BTC each car. It's just fascinating. But if BTC goes to, I don't believe it will happen, if BTC goes to $10,000 or $3,000, I don't think Tesla would keep that promise, right? It's just the way it is. They won't keep that promise. So it's a hard subject to choose a coin to invest, because when we buy and hold a coin, we are expecting it to raise in price over time. And yeah, Bitcoin is not it's not a success, and most currencies in the world are also not a success on that, because it's very challenging to have a steady, constant, stable price if the coins are either devaluating or being used in speculative markets and so on. Bitcoin was originally designed and desired to be, by developers, to be a coin to use in day-to-day transactions. But the Bitcoin properties just pushed people for the buying and holding strategy because highly decentralized, highest security possible, proof of work, lots of competition in order to keep the network secure. Even if the governments want to make Bitcoin illegal, if they want to ban Bitcoin, they can't shut down the network. So people will continue buying Bitcoin just to protect themselves against inflation. So Bitcoin by nature has that aspect, that quality of protecting people from inflation. So if governments want to ban Bitcoin, they can shut down the network. Bitcoin will always exist because ideologically it's very much superior to what governments are doing, and they are censorship resistant because it's decentralized. Thousands and thousands of computers are sustaining the Bitcoin network. And yeah, Bitcoin is feasible for long-term investing, but other coins, we have this mismatch between programmers' intention and what the users are doing. In crypto space, we have mostly speculative fast, right? People just want to trade currencies, and most average investors, they don't know what the token is they're served for. They don't know the utility of the tokens they are buying. They're just buying, expecting it to increase in value and then selling later on. But you should look for tokens and coins that really have an intelligent and elegant tokenomics behind it, so that you know that you're buying something that by definition will increase in price over time. So let's go for the thing here, which is the blockchain trilemma. I would propose a blockchain tetralemma. Let's first look at the blockchain trilemma. Blockchain trilemma is this triangle, this model that says that it's very difficult to have a blockchain that has all those qualities at the same time. If you build a blockchain and your code is like giving a high level of security and decentralization, then you lose scalability, which is the case for Bitcoin. And if you have a high scalability and high decentralization, you lose a little bit of security, which is the thing on Nano and IOTA. They use a different structure which is called a DAG. I'm not going into a deep investigation on the differences of the structures in different blockchains. Just want you to understand this general idea. If you want security and scalability both together, usually you give up the centralization aspect, which geared more to the XRP design. They get a high security and scalability aspect, but they don't have as much decentralization as they should. I don't know if they should. Just telling they should, because it's a general blockchain idea. XRP is going through a lot of hassles because of the lack of decentralization. So there's a fourth problem here, which is the coin feasible for buying and holding? If you have a good blockchain, it doesn't mean that the token is a good one for buying and holding. It doesn't. It really doesn't. So you should understand the incentives of the network design, of the people's interactions, what is written in code, will provoke some sort of interactions among people, and those incentives that's written in code will drive people's motivation and will drive ultimately the price of the token, the native token. So is the design of the network enough so that we will have an appreciation of the native token? If we have those three qualities of the blockchain trilemma and we have a good economic design so that the token can appreciate over time, then it is a good coin to buy and hold. And here in Nervos Investor, I'm not looking at charts, not doing price prediction. I just want you to understand how to really evaluate the fundamentals of a blockchain, of a good blockchain, because it's very different than evaluating a company's balance sheet. So this is it. You want those four qualities all together. You want to buy a coin that you know that will be higher in value in the future, and you want to have proper security, proper scalability, and proper decentralization, depending on the coin design and utility. This is fundamental. In Bitcoin, we don't have as much scalability. It's the lowest guy in the room, but it's still the highest priced coin today. So we have to understand the token, the utility and economics, and the ecosystem design in order to understand how much security do I need, how much decentralization do I need, how much scalability do I need. And that's it for the blockchain trilemma. So the end result is many blockchains can't solve the trilemma and still bear holders' interest in mind at the same time, making those blockchain unfeasible for investing. So you should be careful about that. So in Nervos network, we have unlimited scalability and Bitcoin grade security. We are going to see why now. So the first thing is Nervos design are done in two layers. So layer 1 is called the trust layer, and layer 2 is called the scalability layer. So in layer 1, looking at the blockchain trilemma, in layer 1 we have a high security and high decentralization. It's amazing, right? High security and high decentralization. But why do we have that? Because Nervos network is designed by kind of inspired on the Bitcoin network. So we have a proof of work network that does it does some great optimizations. And the biggest thing that we want on layer 1 is just high security and high decentralization. We want the network layer 1 to be able to store hordes of value. It's a trust store, a universal trust store. What does the network stores? What does the network store? Sorry. It stores anything that we consider a valuable asset. So it's designed for storage. It's designed to prove ownership. It's designed to store the highest value possible. So it's kind of inspired by the Bitcoin proven algorithm, and it improves upon that to have that strong layer 1 secure and decentralized and censorship resistant. This is Nervos layer 1. It's a high level trust, universal trust store. And on layer 2, we get things going really fast. Because we have the layer 1 trust store, we can just design layer 2 to be unlimited scalable. So we have unlimited scalability on layer 2. This is the Nervos network, layer 1 and layer 2. Okay, so layer 2 could do lots of transactions at once, like 1,000 transactions in a second, 50,000 transactions in a second, and aggregate all those transactions in extracting one unique proof that it's registered on layer 1. So we could have thousands of transactions coming in. You get all those together. You represent all those transactions on layer 2 in just one transaction in layer 1. You aggregate the value of many different transactions into one transaction only in layer 1. What that allows is you can have a highly scalable network, highly scalable application. You can charge a very small fee from each user, and you can just add all those fees together and pay for a high fee in layer 1. If you do that, you really make the transactions per second discussion irrelevant. This is what Nervos has designed from the start. The transactions per second discussion is just irrelevant on Nervos network. This is the very first thing that Nervos does. And the second thing, I just said that TPS is obsolete and irrelevant. And another great thing on CKB is the primary token, the native token of layer 1. The primary utility is enabling blockchain data storage allocation. So anybody who is going to write something or store an information in the blockchain, it has to hold a certain amount of CKB in their wallet. Everybody that wants to use Nervos blockchain has to hold a certain amount of CKB. For example, if you have, let's say, 10 different coins in your portfolio and you want to store all those coins in Nervos network, it is possible. You could use layer 1 of Nervos network to store your portfolio, and you get a high degree of security and sustainability. So you got a Bitcoin grade security and a very long-term sustainability of the network, and you can store your 10 assets from your portfolio. If you do that, for each asset balance you have to have 150 CKBs or CKBytes. You have to hold 150 CKBytes. And as long as you put that balance in the network, as long as you leave there the balance, those CKBs cannot be spent. They stay locked. So this is amazing because if you have 10 assets, you're required to have 1,500 CKBs because you should be responsible for how much storage you are requiring from the network. So this design makes CKB tokens scarce, makes the network very sustainable. You are kind of paying for the storage, and it keeps the network decentralized. Because now we have just a certain amount of CKBs in circulation, and this limits the amount of information that can go in the blockchain. So this will bring you so many questions over time. We are going to investigate many of those questions in the future, but the basic principle is as more people are storing their CKBs in the network or storing their assets or applications in CKB network in their code for the smart contracts, as more people use the Nervos network blockchain for storing data, the more scarce, the more demanded will be the CKB token, and the more scarce it will be, and its price will go up, because that's how markets work. So very clever, very important, very elegant solution. So CKB primary utility goal, it's not to become a token that will be used for paying gas in transactions only. If you see CKB's transaction fees, it's ridiculous. It's very ridiculous. But even though it's ridiculous today, it will be higher tomorrow as more and more people start to use the network. So the question you should be asking right now is, will CKB face the same problems as Ethereum high gas fees? And the answer is, look to layer 2 scaling. If layer 1 transactions get too expensive, the developers can actually design a layer 2 in order to just charge a very small fee from like 1,000 users, 1,000 transactions, and aggregate all those transactions into one confirmation on layer 1. And the sum of those 1,000 transactions can be used to pay for the layer 1 storage and transaction. So Nervos is a very holistic blockchain. It's a very well thought blockchain holistically. They are looking at all aspects. The team is looking at all aspects and all limits of price and market demands. So it's incredible the amount of security and scalability that they could bring to the market at the same time. It's amazing, isn't it? So this is an example of how it happens. So layer 1 we call the common knowledge base, because it's the place in which people will store the value that needs to be really secure. So layer 1 does not have a high TPS, but it kicks ass in security. And the layer 2, we have Godwalken. It's one of the frameworks, one of the tools that programmers can use to store things, to do transactions actually, and do transactions on layer 1. So Godwalken will be able to do thousands of transactions at once and aggregate all those transactions and do just one transactions on layer 1. It doesn't matter how high is the price in layer 1, you just scale a little bit more on layer 2. Well, transactions on layer 1 are getting too high, so I will just start to aggregate like 10,000 of transactions in layer 2, and from those 10,000 I'm doing one transaction in layer 1 so I can pay for the layer 1 transaction. So as time goes on, more and more people use the Nervos network protocol, and the more transactions are needed on layer 1, the higher will be the fee, and the more and more people will do transactions in layer 2 only. And there's a prophecy in the Nervos blockchain, which is in the future, when the network is really required and demanded, most people will be just using layer 2 transactions. They won't even know that there's a layer 1 serving a layer 2. They won't be able to interact. They won't need to interact with layer 1 directly. So this is the basic principle here. And by that, we can understand that as time goes by and as the token grows in price, more and more miners will want to come in, because the higher the token is in price, the better for the miners. And as more and more miners come in, the more security the network gets to their users. And as the more secure the network is, Nervos network becomes a fortress. Nervos network becomes a fortress. The more people with high value assets will want to store those assets on Nervos blockchain, and they will be able to pay for those transactions on layer 1. So there will be a competition for who has the highest amount of value to store in Nervos blockchain, because it's Bitcoin security, unheard of sustainability for assets. So highly decentralized stuff. It's impossible to take Nervos network down. It's censorship resistant. Who wouldn't want to store value on that network, right? And the beauty is highly decentralized, highly scalable, and Bitcoin grade security. And the token itself has a good design for buying and holding. You are not expected to be spending CKBs every day on everyday transactions. It's not meant to be a day-to-day currency. It is like land. You buy CKBs, you have a part of a piece of land inside a fortress, a digital fortress. It's amazing. Yeah, it's amazing. So the end result is Nervos network has unlimited scalability, proven security model, fees can be inexpensive in L2, and the CKB storage utility represents land in the blockchain space, making it more scarce as more dApps live in the network. It's cool, right? So we just covered 2 great blockchain killers and how Nervos blockchain covers you. They got your back. And if you buy, you will be getting the developers back also, because as we buy, the team can do more and more stuff. So it can continue developing the network. The next video will be about isolated networks. It's another great, horrible blockchain killer, and we'll see how Nervos network handles it very, very well. So if you want to buy Nervos token, you got the CKB token. And you can buy it in Binance, Huobi, Bithumb, Voyager. Oh, I forgot. No, we don't have Portal Wallet anymore to exchange to buy CKBs. We will be launching ClearSwap soon. Yeah, come and chat with us, subscribe to this channel, and come to the Telegram to have a nice and day-to-day conversation about CKB tokens and other blockchains. Bye-bye.